Here's another investment strategy that might be in line for a rethink. For investors interested in the junk bond market, think again. PIMCO, the world's largest bond fund, says avoid junk. Michelle Mulcahy is here to explain. Hey, Michelle.
Hi there, Haslinda. Well, those high yields may be tempting, but PIMCO thinks the risk is way too high. In fact, PIMCO describes the high-yield bonds as black holes of credit. Now, recovery rates for defaulted debt have fallen below 20% from about 40%. But despite this, PIMCO thinks we will see a rise in defaults. Curtis Mewborn, a managing director at PIMCO, thinks that business and economic conditions are worse than in the third quarter of 2008 and that credit spreads have returned to pre-Lehman levels. So he thinks, Haas, it's best to avoid junk.
Okay, dump junk. What do we do with our money? What does PIMCO suggest?
Well, Mewborn, the MD over at PIMCO, says that there is compelling value in some parts of the investment-grade corporate bond market. The company does like high-grade bank and utility bonds and some energy bonds. And, Haas, if you must add some junk to your investment trunk, then high-yield metal and mining companies are the way to go. Mewborn believes that they will benefit from emerging market demand for commodities. So that's his advice. Go for high-yield metal and mining companies. Otherwise, dump the junk.
I have tons of junk at home. Michelle Mulcahy, thank you so much for that.